Welcome to Pimpy's Investment Chat, where we keep investment talk simple. And here's your host, Pimpy.
What is going on out there, peeps? All right, let's talk about why it is that silver is king and the best investment between the two metals. Before we get started, hit the thumbs up button. If you're not a subscriber, please do so, because when you do, it helps out the channel, and I surely appreciate it. Speaking of buying silver, or gold, or any other precious metals for that matter, go check out our friends over there at Money Metals Exchange. The link will be down below in the description. If you are a first-time buyer and you spend more than $100, use promo code PIMPY, P-I-M-P-Y, and you will get a free half ounce of silver. So why is silver king? Let's take a look at this article. It's a little bit older, but it does make a lot of sense and definitely applies for today's market. Physical silver repricing, decoupling from artificial silver paper products. We see that happening. It's still continuing to be manipulated at the moment, but it definitely is going to change here shortly. 100 years of physical silver price suppression. Physical silver inventories are gone. Physical silver stockpiles have been cannibalized. Global physical silver mining industries have been destroyed. Now the repricing of physical silver begins. The price for real physical silver is currently decoupling from the artificial paper price for silver. What does this mean? Why should you care as an investor? What it means is that the world's most heavily suppressed commodity market is about to be liberated from its price manipulation for the first time in over 100 years, especially with Putin pushing everybody towards the gold standard. That's a big deal. For investors, it's a chance to participate in the world's radical, permanent repricing of a commodity in the history of commodity markets. That's a big opportunity. Let's start at the beginning. The true price of silver. Humanity has been mining and refining gold and silver for nearly 5,000 years. For over 4,000 years, the approximate gold to silver price ratio has been 15 to 1. The two metals exist in Earth's crust at a ratio of 17 to 1. That means for over 4,000 years, humanity has had a slight preference for silver over gold relative to supplies. This is not surprising for two reasons. One, silver is more aesthetically brilliant metal than gold. Silver exists as an ideal scarcity to make it perfect as a people's money. Today, the gold to silver ratio is somewhere around 70 to 1. It has recently soared to extremes of over 100 to 1. If you guys remember, in July of 2020, I believe it was 124 ounces of silver for every 1 ounce of gold. I used it as an example, saying that if you had 10 ounces of gold at the time and you made a trade for silver, you would have got 1,240 ounces of silver for your 10 ounces of gold. I think it was about 2.5 months later, it got to around 68 to 1, I believe it was, somewhere close to that neighborhood. And what would have happened was you would have got 18 ounces of gold back for the same 1,240 ounces of silver once the ratio started to close. That means you gain 8 ounces of gold just by swapping on the ratios. It says, we're told by the media, the pseudo-silver experts, that this is because silver is now an industrial metal. I don't think so. It's been an industrial metal. This is patently ludicrous. I love that. Silver is still more beautiful precious metal than gold. It is still used as money by billions of people around the world. But as the world's most versatile metal, it also has countless industrial applications. This additional usefulness and demand can only make silver even more valuable, not less valuable. In other words, in any rational market for silver, the gold-silver ratio would be less than 15 to 1, which history tells us it's traditionally been 15 to 1. Reinforcing this point, the above-ground supply ratio for gold to silver is closer to 1 to 1. This reflects the fact that most of the world's silver stockpile, accumulated over 4,000 years, has been cannibalized and literally consumed. Physical silver is 5 times rarer above ground than physical gold. Only 8 ounces of silver are produced for every 1 ounce of gold in today's world. This is because there aren't really any good naturally occurring silver deposits left in the world. The Burning Platform, the site, makes an argument to buy SLV, which is paper product. Most of the world's above ground silver today is spread around the world's landfills in concentrations too low for anyone to be able to recover unless until the price of silver reaches a rational level. With the price of gold currently at $1,830, it's now actually at $1,930. A minimal ratio price for the silver today would be $120 an ounce. See, I told you this article is just a little bit older. So if they're saying that silver should have been $120 per ounce when gold was at $1,830 per ounce, that would make it closer to about, $150 an ounce now. Given the current above ground supply ratio of these metals and the historical preference for silver over gold, a compelling argument can be made that the price of silver should be $1,000 an ounce today. However, based on the artificial debt load and the massive manipulation by JP Morgan and several other banks, the real actual price of physical silver today should be $4,803 per ounce to the dollar ratio. Gold is 8 times higher based upon production of gold to silver ratio. That would make gold at somewhere around $34,595 per ounce. These prices are real time per the US debt clock. A century of artificial silver prices. Roughly 100 years ago, we saw the first decoupling in the silver market. For the first time in history, the price of silver was no longer priced at the rational level relative to gold. Since that time, the price of silver has been suppressed and not allowed to reach its fair market value. And what are we hearing now? They want to put a $30 cap on silver. Once again, the markets are being interfered with. And sooner or later, people are going to have to really speak up and let them know how tired you are of this crap. The evidence of the price suppression is all around us, that's for sure. We see the paper market smashing the price of gold and silver every day. They're trying to keep the price of precious metals down because they need those precious metals in order for us to be shoved into this great reset and the Green New Deal. Destruction of silver stockpiles. No one has studied the global supply of silver more than noted silver authority Ted Butler. Butler estimated over the decade ago that roughly 90% of the world's stockpile of silver accumulated over more than 4,000 years has been cannibalized and consumed in industrial applications. From a stockpile of over 10 billion ounces at the end of World War II, Butler estimated in 2004 that only 1 billion ounces remain. He went even further at the time, suggesting that the above ground supply of gold now exceeds the supply of silver, making, of course, silver more scarce than even gold. In a world that has always preferred silver to gold relative to supply, if the supply of silver is less than the price of gold, shouldn't the price be higher than the price of gold today? 600-year low for price of silver in real dollars. Beginning in the late 1980s, the price suppression of silver by the Western banking cartel reached new extremes. In the real dollar, the price of silver was pushed to a 600-year low. The real dollar price for silver has moved only fractionally since then. Destruction of global silver mining industry. With the price of silver at a 600-year low, over 90% of the world's silver miners were driven into bankruptcy. For the first time in over 4,000 years, most of the world's silver has come to us as a byproduct of other mining. Roughly 70% of the global silver supply today comes from such secondary minings. The fact that the price of silver will no longer even support a primary silver mining industry is the most obvious proof that this price of silver has been extremely suppressed to grossly irrational levels. The world is running out of silver. Thanks to the silver price suppression, we no longer have an adequate supply of silver. The global silver market has been in a permanent supply deficit for over 30 years. Between 1990s and 2005 alone, global silver inventories collapsed by 90%. Thanks to silver price suppression, we no longer have an abundant stockpile of silver. And this is how you will benefit by investing in silver today, especially with the squeeze happening to gold and silver, us moving into the gold standard, as well as the need for silver in all of our modern day technology. As a precious metal, gold and silver have historically been conserved by humanity. The gold is still conserved. The silver is gone. To summarize the current state of the silver market, permanent supply deficit, stockpile is gone, silver currently priced at only a small fraction of what is needed to restore market balance. Silver price decoupling. The official price of silver in the global silver market is currently at $24.60. But this is the paper price. It is heavily manipulated price at which the bankers trade paper, silver instrument paper called silver. In other words, it's like we spoke about. Gold and silver prices have been getting smashed recently by the paper market. Paper markets are easily manipulated. That's why you should be upset that cryptocurrencies are now being offered on the paper market. In official testimony to the CFTC, self-described precious metals expert Jeffrey Christian stated that only 1% of the trading in the gold market was actual metal. That's terrible. They're just trading paper. And you ask yourself, how is that possible? Because we allow it, and the powers that be use this to their advantage to get themselves richer. All the rest was trading in paper called gold. Experienced silver traders strongly believe the silver market is even more heavily leveraged, falsified with paper called silver. A totally artificial market. The bankers can create infinite quantities of paper called silver with a mouse click. Real silver has to be mined out of the ground. There is a significant real-world cost to this. Yeah, so once we go into the gold standard, they're not going to be able to use the paper market any longer because it's going to have to be supported by real, actual, physical precious metals. Obviously, the price of silver, the world's most useful metal, has to be more than it costs to mine it out of the ground. In the banker's fantasy market for paper called silver, the minimum fair market price for silver is never, ever mentioned. The bankers simply pretend that real silver can also be conjured into existence with nothing more than a mouse click. Now, after 100 years of price suppression, with the global silver stockpiles gone, the silver market has begun to reprice itself in a manner that is totally out of control of the banking cartel. We move into the gold standard, it's going to easily expose the corruption and the paper market manipulation, and somebody's going to have to be accountable for what has happened to the precious metals market. There are now two prices for silver. One fundamental artificial low price, the price of silver in the banker's paper called silver market. One legitimate real price for actual metal, the price that people must pay to buy real silver directly. While the phony artificial price for silver is currently again at $24.61, real silver costs anywhere between $35.50 to $39 an ounce. Premiums are high. You can tell that demand for silver is much higher than people are letting on. That's because people are willing to pay the higher premiums to own silver. And that is maintaining and supporting the silver demand market. If people didn't believe that silver is more valuable, they wouldn't be willing to pay the premiums that we see. It says on here, both do not reflect the real current value of physical silver. It does not show that in the suppressed market. Retail dealers are now parting ways with the derivative paper pricing, a type of arbitrage, a type of Robin Hood maneuver. Short continues in SLV and the comics, and the retail purchases are discouraged by seemingly high prices. Fact is that both prices are astronomically discounted from a physical silver's real value versus the US debt clock. Silver is known as the poor man's gold. It always has been. That's because most people can't afford to buy real gold. Going into the gold standard is going to have an effect on gold, but silver as well. What I'm hoping happens is that these markets really get exposed and all the corruption is out in the open, and people get pissed off enough to where they can make some demands and some changes happen. Like I said earlier, the United States is supposed to be a capitalist country. It's not. It is a manipulated capitalist country, and it has been getting that way more and more recently, especially since 2000. To make matters even worse, the people that are manipulating the markets share this little bit of information with their friends, allowing everybody else to get much richer while they turn around and swipe the money from the poor. So if you can't really afford gold, even fractions of it, then you should turn to silver. Silver is going to have much higher percentage of gain than gold will due to the scarcity and industrial uses and demand of silver. I said this before and I'll say it again. We will see a day in which silver not only catches the value of gold, but passes it up, in my opinion. Let me know what you guys think down below in the comments. Remember, if you're not a subscriber, please do so, because when you do, it helps out the channel, and I surely do appreciate it. And I'll catch y'all later. I'm out.